Traders, was I wrong about the Great British Pound? A couple of weeks ago, Jordan asked me on one of our weekly live streams here on Market Wake Up what my feelings were to the pound and would it be a currency I would be interested in buying. And a couple of weeks ago, my gut feeling was no, it's not one that I would be willing to buy.
So just explain to me once more why you're not doing it.
Because my head is telling me no.
However, my opinion on that has changed completely, largely due to the fundamental data that has been coming out of the UK recently, which has been really positive to the point of where we have started to see the pound rally against most of its G7 currencies, including the US dollar, which has been bouncing back and forth because of the trade tariff narrative at this current moment in time. So let's go take a look at why the pound could be a strong currency. Let's go focus on some markets that it could be stronger against, and then we can have a look at some potential actionable zones of interest on multiple currency pairs. So let's get into it. Before we do dive in, make sure that you head down to the description. You will see a link for a free weekly newsletter provided by me and Jordan here at Market Wake Up. We give you actionable insights as well as a little bit of macro gossip that's been going on throughout the previous week, including stuff like Elon Musk, Donald Trump, and the latest trade tariff announcements. So make sure you head down there and hit that link in the description. So let's talk about the fundamental aspects of the pound and why the pound has been performing so well. So what I do here, or what I've got here, is a little fundamental tracker. This is something that I like to do when I look at countries' economies. I like to build a little bit of a fundamental tracker, how the sort of fundamentals that matter to that particular economy are performing. Gives me a great insight into what could potentially happen next for that currency. Now, if we look at the UK, it's actually pretty good, right? So one thing that kind of stood out to me for the past sort of month or so is retail sales, which is all down to the consumer and how the consumer spends in the UK economy, actually rose to 1.7%, up from a previous, which was minus 0 point something percent, but it actually rose to 1.7%. The forecast suggested that it would be at 0.4, so the forecast was already expecting a jump, but the actual came in at 1.7. So showing us here that consumers are really happy to spend in the UK at the moment. What then kind of came out of this as well, not just from the retail sales, GDP growth actually saw a beat or a sort of jump above expectations as well. Actual came in at 0.4, forecasted at 0.1. That's a 0.3 change there. Now, I've singled out GDP here because this is what a lot of my gut feeling was based off of previously. It was based off the fact that the Labour government were going to increase taxes, reduce government spending, essentially restrict the economy. Yet GDP has grown, and GDP was the one where we saw the headline saying GDP is not going to grow at all in the UK, could even begin to turn negative because of this tightening of fiscal policy. Yet GDP rose to 0.4, beating the expectations of 0.1. Kind of tells you the story here of what you should really follow, follow the gut feeling of what could happen from a fiscal standpoint, which in theory could 360 or sorry 180 if it was to be the fact that gilts again started to dictate the market. Yet GDP growth, an actual number that's come out that we can see that we can use as fuel for a potential trade idea, has actually come in at a little bit higher. Other things as well that have been really good in the UK recently: the unemployment rate has come down to 4.4%. Manufacturing production has gone up to 0.7%. Big one though, services PMI 51.1 was forecasted to be at 50.8. UK is predominantly a service-based industry or service-based country, and we can see that there we've seen a sort of increase there on services PMI. Now, not only is that kind of fundamental picture here, just from a color coding point of view, you can see that I've color coded it in a way that is really easy to read, and you can see there's a lot more green there than there is red, which again is fairly positive for a country's economy, usually leads to a stronger currency. Okay, so we can see that there. Another one, if I just hit Alt Tab, what I want to do is just head over to the other screens that I've got here. One second, let me actually go to the commitment of trader reports, because something's been kind of festering here as well for me, which is something that I just thought was really interesting. So I'll highlight the British pound here. Let me just grab a pen tool for a second, and what I'm going to highlight to you is what has been sort of going on here, right? Now, I don't know if you follow the current trader reports, but this is something that I talk about quite regularly. The fact that we start to see hedge funds changing positions or reaching extremes can offer traders opportunities with the markets, especially someone like myself. Now, what I've noticed about the British pound here is that over sort of the past 4 to 5 weeks, we've actually seen hedge funds increasing long positions. Now, we know that because these are the net contracts that are being shown here right now from the hedge funds, right? And what you can see from January 28th, we were at negative 21,000 contracts net. So that means the long contracts minus the short contracts, essentially, right? So we were at negative 21,000. However, you can see that we've slowly increased. We went to minus 11 to minus 3 to minus 579, positive now 4,463. So we can see that hedge funds are starting to change their opinion or their positioning of the pound at the moment, and they're actually buying into the pound right now. Now, it's nowhere near the highs either. You can see that the highs are 142k, so that's really promising for somebody that does want to go long on the Great British Pound, because you've got hedge funds also backing this up. Let's just kind of dive into it as well and have a little look at what's happening in terms of it from just a visual point of view. I'm just going to take off the commercials and the small speculators there and just kind of highlight this as well. Now we can see, and I actually talked about this a while ago, hedge funds were shorting at an extreme on the pound, right? Now, typically that can lead to a reversal in price. I talked about that we were at a similar extreme in June of last year and prices rallied. Now you can see again, prices are rallying here on the pound. So trying to just kind of give you that little bit of insight. We talked about this a few weeks ago, that we were at an extreme short. That's a reversal potential signal, and that has followed through. Now, the pound has kind of taken off across the board. It can be hard to try and get into a position right now. This was something that I tried to line up earlier. I didn't actually get into this trade. You can see my alert is still here. I wanted price to pull back, trigger my alert, and then I'd look to have entered the market. But this is a typical trade that I would have taken in terms of an opportunity. Why? Because what I tend to look for is a trend that has been developed within the market. I then look for what I call the secondary phase to turn into a primary phase, right? So when I look at this market in particular, and I'll just grab a pen tool again here, I just want to change colour on the pen tool. When I look at this market in particular, I'm looking to try and see if there's a trend development, right? So if I look at this daily chart, I can see that the market's making higher highs and higher lows. Now, if a market is going to continue to do that, what I would be expecting is the secondary phase, which is arguably the retracement phase in an upward trend or a downward trend. I'd want to see that broken, right, and then see that primary phase come in. There are a couple of ways to do that. One of the best ways that I feel is useful, or what I tend to use, is a change of trend on a lower time frame. Really simple stuff, right? And I want to just highlight this area here, because this was the secondary phase in that bullish trend, and you can see the market starts to make lower lows and lower highs. We then get a change of that narrative. We get sort of a head and shoulders pattern again. This is why these patterns are so popular, because they happen often and it usually leads to a change of trend signal. And you can see the market has taken off. That's why I wanted to get involved. What happened was I missed the initial entry and price was already here. So I set an alert to see if I could get a pullback entry, and it just didn't work for me. The market just continued to take off to the upside. And the reason why I'm talking about the market kind of taking off and the fact that we waited for this sort of secondary phase to turn into a primary phase is because you may look at that now and go, well, that move's gone. I can't get on anything here. And that would be fair to say, right? Yeah, that would be fair to say. But there is a way that we can try and get onto a move. Now, what I tend to look at as well is Forex correlations. So I do this because, one, I don't want to get into another position that is correlated, okay? Because that is something you just do not want to do, okay? You don't want to get into correlated moves, okay? Because that is just something that is you know, negatively going to impact your risk allocation, okay, essentially. So what I can see here is what I do is I look at the absolute correlation. I look at the top positive, top negative, and I will look to try and use that to my advantage. One way of doing that is, if I can't get into a pound trade, is there somewhere else that has a really strong correlation that I could potentially get into? One thing that I picked out here was gold. Jordan's going to hate me for this, but pound, US dollar and gold correlation has a 72.7% correlation right now. That's quite high, right, in my opinion. You've also got things like euro, US dollar, 82.4%. That's fairly common. But things like gold and silver have been on my radar to be a buyer of. And the fact that it's correlated with the pound US dollar price right now makes me think that that could be good markets to go and explore for opportunities, right? So pound, I'm looking for upside. Pound US dollar looks great. Euro dollar we could look at. Maybe even gold prices we could take a look at. Let's actually just do that for a quick second, because if we are going to see that correlation play out, then gold prices may actually continue to the upside. Looking at gold at the minute, we have kind of come back into a little bit of an area here, which is around about that $2,850 we've got a dollar area, and we have started to have a little rebound here. Looking at the 4-hour chart though, nothing here yet just to kind of signal to me that we are going to see that change at the moment. Price is below the 50 moving average on a 4-hour. It's above it on the daily, which is good, but the 4-hour we're below at the moment. Hourly we've broken it though, which is a positive, and you can see that we do have that change in trend on the hourly. I'll just be a little bit more skeptical here, because there is a strong correlation with gold and the stock market as well, and the stock market has been underperforming in the US at this moment in time. But other markets that we could look at, pound Aussie has just broken through key highs. Pound Kiwi, very much the same. Pound CAD as well, also breaking higher too. So I think a lot of these markets here are something that I want to try and exploit. Pound Aussie, or I really like the idea of this coming into the 2020 highs. I think that's a really good area for the market to go and target. Gives us a real clear area of structure to work with as well. So what I'll be looking for here is some kind of pullback on the daily chart. Look for that secondary phase. Once that secondary phase ends, look to then be a buyer on a change of trend to try and get back into a potential bullish move or a bullish phase in terms of the primary phase. So hopefully that all made sense. If it did, let me know. Please like and subscribe if you're new to the channel, but also think about this kind of trading concept here. I call it the WCS method. It's why you want to trade something, the conditions that are in it, and then apply a strategy. I've kind of talked about that throughout this method on the pound. So hopefully that makes sense. If it does, leave a like and I'll speak to you soon.